the market does not realize that EMH Cinovec's time looks to have come.
This grant absolutely enables the project.
The grant is subject to completion of administrative processes. What does that mean practically, Keith?
Welcome back to Rockstock Channel. It is Monday, December 1st, and today we are back again for the first time in 8 months with Keith Coughlan, Managing Director of European Metals Holdings, following a major announcement last week in that the Czech Republic will be providing up to 360 million euro in the form of a grant, not a loan, in connection with its Cinovec lithium project in the Czech Republic. This very substantial local government funding follows Cinovec receiving in April another grant of 36 million US dollars from the EU's Just Transition Fund. Recall, too, that European Metals Holdings tapped into other EU funds last year via an equity investment from the European Bank for Reconstruction and Development. The two grants for Cinovec this year followed the project's designation as a strategic project from both the Czech Republic and the European Commission in connection with the CRMA, the Critical Minerals Act. And it comes at a time of heightened urgency about European vulnerability about critical minerals. On Wednesday of this week, the EU is set to unveil its Resource EU plan, which is along the lines of its Repower EU initiative, which helped the Union overcome the energy crisis from the Russia-Ukraine war. According to an October speech by European Commission President Ursula von der Leyen at the Berlin Global Dialogue, the aim of the Resource EU plan is to secure access to alternative sources of critical raw materials in the short, medium, and long term for European industry, and would include joint purchasing and stockpiling, boosting investments in strategic projects for the production and processing of critical raw materials in Europe. Since China rattled its rare earth saber a second time on October 9th, we've talked about America moving at warp speed to solve its critical minerals vulnerabilities, in the same way the U.S. responded to COVID-19 in finding vaccines. It's worth reminding that Europe played a key role in developing those COVID vaccines. The breakthrough mRNA science used by Pfizer came from BioNTech in Germany, and the Oxford AstraZeneca vaccine, still one of the world's most widely administered, was developed in the UK and produced across the EU. As America and Europe scramble to solve their critical mineral vulnerabilities, they will both collaborate and compete for projects on their home turf and with their friends in Australia, Canada, and elsewhere throughout the world. Which brings us to Cinovec, Europe's largest hard rock lithium project in the center of the continent, which now looks to be on a fast track to get permitted, financed, and constructed. As a reminder, RK Equity is a strategic advisor to and holds equity interests in European Metals Holdings. But we are not, of course, financial advisors. This video is for informational and educational purposes only, and nothing you hear today should be considered investment advice. Please do your own research and read the disclaimer at the end of this video. Before we begin, we'd like to thank our sponsors, Lithium Royalty Corp and USCF Investments. Lithium Royalty Corp is traded on the Toronto Stock Exchange, ticker symbol LIRC, and holds more than 30 royalties on hard rock and brine lithium projects such as Core Lithium in Australia, Sigma Lithium in Brazil, and Trey Q and Mariana projects owned by Zijin and Ganfeng in Argentina. And USCF Investments is a pioneer in commodity ETFs for nearly 20 years. Their 15 funds include single commodity exposure, broad diversification with SDCI, and themes like ZSB for battery metals and USG for gold with income. To find out more, watch our inaugural episode with their CEO, John Love, and visit uscfinvestments.com. European Metals Holdings trades on both the Australian Stock Exchange and London's AIM market, same ticker symbol, EMH. EMH's stock price is now 38 Australian cents, up 150% year to date, but still only equivalent to about 50 million US dollars. EMH holds a 49% interest in the Cinovec project, with the remaining 51% held by one of Europe's largest utilities, CEZ, which is 70% controlled by the Czech government. As I posted last night, I started 2025 narrating from the RK Equity Scoreboard AC/DC's It's a Long Way to the Top. Until Friday, EMH has largely traded by appointment for the past 2 years, with some long-suffering shareholders down 70 to 90% from about £1 or $2 in 2021, when Mr. Market thought that a big European auto OEM making big EV noises like Volkswagen would follow in Tesla's footsteps to partner and offtake in the heart of Europe with EMH and Cinovec. Many such shareholders have no doubt taken the current liquidity opportunity to relieve themselves of EMH shares, as they did earlier this year when EMH received that Just Transition Fund grant. Admittedly, I have been tempted to sell some of my shares, mostly acquired at 40 cents a long time ago. But as I revisited the logic of this investment in the first place, and as I read the European tea leaves against the backdrop of improving lithium pricing and sentiment, I conclude that EMH Cinovec is significantly underpriced and underappreciated. The market does not realize that EMH Cinovec's time looks to have come. Left for dead, the story is suddenly catalyst-rich, with imminent DFS, near-term permitting, and an offtake partnering finance process facilitated by its host country and the EU's very substantial financial blessing. Further, I have learned that keep it simple stupid, keep it spodumene stupid, has not been the only successful long-term lithium investment strategy. Unconventional DLE, as well as unconventional hard rock deposits like Cinovec's Zinnwaldite, are not much of an impediment considering the rise of lepidolite in China and sediment in Nevada, which have similar, if not lower, in situ lithium grades. Generalist retail investors have done well when governments and big street strategic corporates have picked as winning projects super large, somewhat complex, mine plus processing stories with 1 to 2 billion plus price tags and high capital intensity per ton. EMH's partner is one of Europe's largest utilities, a 30 billion market cap company, 70% owned by the government, a government which is now looking to support its project with more than $400 million in free money. With BYD's major beachhead in neighboring Hungary and CATL Stellantis in Spain, to name just 2 major EV battery plants in the region, it's hard to see how Cinovec does not get built. So it seems to me that at 50 million US market cap, Mr. Market is mispricing this likelihood relative to other high capital intensity unconventional projects in Europe and the USA, like Vulcan, Standard Lithium, American Battery, Ioneer, and Lithium Americas, which are trading at 6 to 34 times higher market value. We'll flash up on the screen here the latest Mr. Market or RK Equity Scoreboard to show this valuation discrepancy. With that long intro out of the way, Keith, welcome back. Rodney is going to dig in with a bit more questions.
Well, thank you, Howard. Good to see you again. And to you, Rodney, it's been a while. Thanks for having me on.
Great. Keith, if you could, it's been a while, can you please remind the viewers of the major metrics of the Cinovec project and what recognition the project has received as a strategic deposit and project?
Certainly. So, as Howard stated, largest hard rock lithium resource in Europe, very large resource, about 7.5 million tonnes contained LCE. We've often said that it's not only the largest hard rock lithium resource in Europe, but very importantly, by far the largest hard rock lithium resource in the EU. That's obviously become more important now that the EU is fully on board. But also, since we've last spoken, we've seen Rio put the Jadar project in Serbia into mothballs, and that was, of a similar size, Serbia obviously not being in the EU. In terms of the other key metrics, the DFS that we'll publish at some stage this month, December, will be for the production of 37,500 tonnes per annum of battery-grade lithium carbonate. So it's a significant producer as well as being a very, very large resource. In terms, Rodney, of the recognitions that we've received to date, if I go back and talk about them in chronological order, right at the start of the year, the project was formally recognised by the Czech government as a strategic deposit. It was then very shortly thereafter recognised as a strategic project under the Critical Raw Materials Act, the act that Howard mentioned in the introduction. And shortly after that, it was awarded the $36 million grant under the Just Transition Fund that Howard also mentioned. And now if we roll forward to last Friday, by far the most significant of those formal recognitions, the awarding of a 360 million odd euro grant to the project to help bring it into production. Very serious amount of money, which is obviously not just a large amount of money, but is equally as important, perhaps more important, as an indication of the commitment now to the project, both at a Czech government level and at an EU level. And informally, not a company statement, but my own personal belief is this grant effectively will see Cinovec get built and go into production.
Great. And if we go back a bit, since we last spoke in August of this year, the company announced that it had been granted a preliminary mining permit for Cinovec South. This permit, along with your previously granted permits for Cinovec Northwest and East, means now your entire ore reserve is covered. Are you looking to consolidate all three areas into a single mining permit? Where are you in that process? And what is the status of your progress to receive a final mining area and mining permit?
So yes, we are looking to consolidate all of those preliminary mining permits into one final permit, as we have stated to the market. The last remaining key step in that is the submission of our final EIA by the end of this month, and we're on track to do so. It will then take the process of we're saying early second quarter of 26 before that's finalised, and we'll begin the final process of applying for the final mining permit, which should line up quite neatly with moving towards final investment decision on the project as well.
Right, and recently you updated the market on your release date of the DFS. That seems imminent. It's early first half of December.
Yes, that's correct. So very soon.
And you're fully funded. You've got cash on hand. Is that correct?
Yes. Look, we have cash on hand, certainly through until following the DFS. We'll all get together early in the new year and work out the cash flow and budget between that point in time and final investment decision. But at this point in time, the project is fully funded.
Great. And then, as Howard mentioned, the big news came this week with the approval of up to 360 million euro grant from the Czech government. The grant is subject to completion of administrative processes. What does that mean practically, Keith?
That's a very good question, Howard. And unfortunately, in the wording of the announcement, we have to put these things in, and it may sound like there's still some uncertainty about the grant, but I assure you there's not. We actually have some experience in this now because we've been going through a similar process with the much smaller Just Transition Fund grant from earlier this year. It's simply a matter of putting in place the mechanisms, the paperwork with the ministry, the Czech government ministry that will administer that grant. So there is a reporting structure, there's an audit structure, and there's a payment structure. So the grant covers approved expenditure. So obviously we spend the money, we submit a report as to what expenditure has been made on approved projects. The ministry audits that, and then the payment is made. So it's simple as that. So we began this process and this is probably something that's not well known, but we began the process of applying for this grant in February of this year. It's not something that's just happened in the last couple of weeks. And so we've been going through that process for most of this year. It's now just a matter of formalising the paperwork to administer the implementation of the grant.
Right. And Keith, the grant has a maximum amount of 360 million euro. How will the final grant amount be determined?
It'll be that. And that too is a little misleading. So the grant wording says that it will provide to any one project up to 35% of approved expenditure. So as we've gone through the process since February of this year of making that application, obviously in February, some of the numbers that we had were rough estimations because we were, that far away from the completion of the DFS. But as we've got towards the end of the year, those numbers have been firmed up, and we will spend the money because, we can see where we're going to spend it on approved expenditure, and we will spend all of that money and we will be reimbursed all of that money. So we have to say up to, because that's the wording of the grant, but that is the way that it will pan out.
Okay, great. Yeah, that's what I read, and certainly on the 35% rule, that makes sense. Howard?
Okay, Keith, so you're going to produce 37,500 tons of carbonate. I've compared your project to Lithium America's Thacker Pass as a national champion, for Europe, and they are producing, I think, 40,000 tons in stage 1, also of carbonate. Using that analogy, and it's a $1.7 billion company, and they took a very long time to get permitted, very long time to get financed. They got loans, and they got strategic equity investment from GM. GM owns 38% at project level, and now the government owns 5% at project level. So the economics of investors to lithium or to Thacker Pass at present is, 38 plus 5, 43, there's 57%. In your case, you, in the midst of COVID, Ches came in and bought 51% of the project for $32 million. You have a 49% interest in that project, not that much less than Thacker Pass. Similar amount of tons expected, but you've gotten free money from the, it's well over $400 million of free money. We don't know what your overall CapEx is going to be. I guess we're going to find that out in a couple of weeks. But how do you get this thing financed? Assuming that you get permitted early next year, you've got to get this financed with equity, maybe some loans. The EIB, as I said, the Resources EU plan is going to be announced on Wednesday. I don't know. Are you in talks for other loans? And what's the nature of your dialogues with offtake partners? Is there a GM-like company, or is there a utility or a data center type of company, Google or an Amazon, now going to be a player, given that battery energy storage and the need for carbonate is a more dominant thematic than EVs?
Right. So there's quite a bit in that question, but I'll talk about the last bit first, if I can. And that's, is there an obvious offtake partner there? Well, the European OEMs are household names, as GM is. And, we have spoken with all of them at various stages for quite some time. If you like, we are, we're a period of time behind, say, Thacker Pass, and you can decide what that period of time is. But what that means is, as they were having their conversations with GM, our conversations with European GMs came that much behind. And unfortunately, it came at the time that the lithium price fell out of bed. So that had a negative effect on conversations about offtake, particularly if you're talking about things like floor price, et cetera, et cetera. And it was also at a time where it was very much publicised the troubles that European OEMs were having. We don't need to go through that in detail. I think we've all read that. But, nothing in the EU operates in isolation. So the EU and the EBRD and the Czech government and the German government and the EIB, the European Investment Bank, and the German OEMs, European OEMs, obviously all talk to each other. And to me, that's one of the greatest significances of this grant, is that it now allows us to sit down with all of those people together. Europe hasn't been keen on mining for some decades now, and perhaps this sort of a grant indicates that that's changing. And no one wants to be first, right, when there's a new thing coming along. But it's a case of, well, if you're in, I'm in. So our offtake discussions, I think, will take a completely new light on the back of this grant, and obviously also on the back of the fact that we're seeing renewed lithium sentiment, renewed lithium prices. And I think, it is possible that we will see the sort of thing that you're talking about. I'm waiting to see what is announced at an EU level on Wednesday. I can't imagine there's anything that will be spoken about that will be negative for us, and quite possibly significantly positive for us. But this grant absolutely enables the project. It opens a lot of other doors, or pushes open wider the doors that we've already got one foot in. You talk about other funding opportunities. Well, we would hope that our conversations with the EIB go to another level and that we see them involved in the project. Now, that's not a grant, that's debt, but it is obviously very low-cost debt. It's not only low-cost debt, but it brings a significant level of certainty to the project in the eyes of other EU entities and global entities. But there are other avenues as well. There are at least two of the most important EU economies have their own specific critical raw material funds that are in the order of 2 billion euros that are designed to help secure raw materials for that country's OEMs. And we are in conversation with people along those lines. And then there's also export.
What countries?
Credit. Well,
Germany, I assume.
Germany and France are the two that I'm thinking of, with the two largest funds in this area. And then export credit finance as well, before we even get into offtake of finance and how that looks. So yes, it's a big project for a company. Even now, with the increase in our market cap, we're still only Aussie. Well, I think you said US 50 million. If we had to raise, even 30% or half of 30% of the capex against a market cap of US 50 million, it would be a big ask. But I strongly believe we're not going to have to do that. And I think that the announcement of last week's announcement of the grant is a very clear indication of that.
Okay. And your market cap, in my opinion, should not stay at 50 million market cap. So hopefully you would have equity funding options, as well as, Lithium Americas has, and other companies like, as I said, Standard Lithium and Vulcan have attracted much higher valuations. I have a table here that, thanks to ChatGPT, helped me summarize the Critical Minerals Act labeled, I think, 47 projects or something like that as strategic earlier this year, of which 22 were lithium projects. But I'm going to call them up here and, highlight three of them. Many of those projects, almost all of those projects were, for either recycling or just processing. Some of them were kind of mining, but in reality, the only kind of mine plus processing projects were yours, Cinovec, Vulcan's zero carbon lithium, and also Calibre. And if I look at the numbers of dollars that have been provided, this 360 plus 36 million, just transition, is far greater than the 200 million euro that Vulcan has received so far, and much higher than what Calibre got a $150 million EIB loan, part of a $500 million loan. But I mean, these are Calibre's in production. There's processing there. Vulcan is, targeting, I guess, an FID sometime next year, as you are, with construction, and first production, I think focused on hydroxide, in a similar time frame to what you're doing. We've always said and thought that, as a hard rock project and large in a past producing, area, that this was kind of like a lower risk than, some new technologies. But, hats off to Vulcan. They've done, very well. They have Stellantis as a partner. Stellantis just had a ribbon cutting with CATL for LFP battery plant in Spain. I mentioned BYD is, right next door to you. But China's not partnered at all with Vulcan. Do you see, as much as there's vulnerability vis-a-vis China, Europe has been more accepting of Chinese investment, whereas I'm talking about Grand Bargain in the US, maybe welcoming CATL or BYD. Europe's already welcomed them. So could you see a partner come in? Because still, Ches doesn't have experience doing this. You are a tiny company. And this is a gigantic undertaking. I mean, Thacker Pass by Lithium Americas is proceeding on its own, but in terms of staffing up and building this, apart from financing it, executing the project, could you comment about all of this?
Sure. So again, I'll just take your last comment first, if I can, Howard, and then we'll come back to what you started with, which was the price, the value, relative value, market cap, et cetera, et cetera. So yes, I can clearly see a scenario where a major comes into the project, someone that has experience in actual lithium production. We have gone to some pains for the history of the project to try and keep it European as much as possible. I think that's been helpful from a geopolitical point of view. And at various stages, we've seen different levels of comment at an EU level about Europe looking after its own as much as possible, getting a measure of mineral security as much as possible. And I think there is definitely a level of that. But yes, I do see there being a place for another investor, another partner, operator perhaps, to come into the project. And that's something that I think this grant also helps enable, and for both reasons again. Because the pure quantum of the funds involved obviously gets everyone's attention, but B, because the last thing a major wants is to encounter problems at a permitting government level. Look at Rio in Serbia, obviously. So if this grant gives confidence to a global lithium player that this is actually a project that's green lit and this is a good place to do business, yeah, you may well see that happen. Then if I come back to your first comment about price, et cetera, so just on a really, really simple basis, the grant goes to the project company, GMET. Obviously, none of that finds its way into the European Metals Bank account, unfortunately. But it's a very large amount of money that we don't have to find to maintain our 49% interest in the project. And if you compare that amount of money versus our market cap today, we're trading like our market cap should be 3.5 times just on our share of that grant, if you like, right? So when we announced it last Friday, we were trading at a sixth of the face value of our share of the grant, and the share price doubled or a bit more and then came back. But even now, still 3.5. We could trade 3.5 times where we're currently trading, and that would only reflect our value of the grant, let alone whatever we see when the DFS is announced over the next couple of weeks. I think there's a couple of reasons for that. For our underperformance, if you like, versus other lithium companies, short-term, medium-term, long-term, however you want to measure it. We are only a 49% shareholder in the project, but I would hope that the market's coming to realise that is a massive advantage, not a disadvantage. Ches is a fantastic partner, 30 billion euro market cap or 28 billion euro market cap company, the largest utility company in the region, the largest company of any nature in the Czech Republic, own all of the EV charging stations in the Czech Republic, have a very large percentage of the energy they produce these days coming from green energy, and that number is increasing on a daily basis. And like I say, 70% owned by the government. So other reasons, news flow has been slow. That's for various reasons. That's it. We have had delays with the DFS and what have you. A lot of stale bulls out there. And I think your explanation of where we saw the share price go over the last couple of days is reflective of all of those things. So I think it needs a reset. I think it needs people to sit back and understand what this really means. The money's fantastic, but it's not just about the money. It's about the fact that, to me, as I say, I think this means projects going into production.
Right. If you could just provide a bit more color, though, on just the operating this, right? How do you staff it? Like, what are the steps toward really making a final investment decision and show the market, credibly this is moving forward? And in relation to that, like another company I can make a comparison to is we represented a company called Lithium Power International, which owned 51% of their project in Chile, and eventually, the government state-owned company, Codelco, ended up buying that for something like $300 million US. I mean, does this make sense, to be a joint venture, right? Or I know you can't comment about whether or not you're going to get taken out, immediately, but it would be interesting just to, a thought process. Often companies, take it to a certain level and then they sell out and let, other companies, take it from there.
Yeah, exactly. Well, on the basis of being taken out and what I just said about where we're trading versus what I think is a reasonable value, I hope like hell we don't get taken out anytime soon. But if you look at developing the project going forward, Ches has significant resources. They employ 35,000 people in country. It's a very big company. They have a long history of mining, but of course that's not lithium mining. They've got a long history of coal mining. Part of their brief as they progressively shut down coal mines across the country is to retrain coal miners to become underground lithium miners. That end of the workforce, if you like, there is no problem with doing that. But obviously, lithium is still a relatively new industry. Lithium tech, lithium expertise is still something that's not thick on the ground anywhere in the world. And the project definitely needs a step up in that direction. We have some fantastic people. We've been very good at recruiting, pinching a couple of people out of other listed lithium companies over the years at an EMH level, and now fed them into the project level company. But it will require, obviously, a tooling up at that level, or part, I think, of the normal process you go through in building a significant project.
Okay, great. A further, actually, analogy I could make is Lithium Argentina owns 49% of their project, and Ganfeng is in control there. But Lithium Argentina, which we think is undervalued, nevertheless has they're in production, 750 million market value. But and IGO owns a very small stake in Greenbushes, so it's not unusual for there to be minority equity players as successful public equity stories.
Yeah. I think the other thing, Howard, if I can, just on that, we're still in quite a fast moving space from the point of view of developing technology in the lithium space. And, we still have, even post DFS, there are a number of potential optimizations that we will continue to work on between now and, final investment decision or construction decision that, we hope will improve the economics of the project as well. And I think that's going to continue for some time.
Okay, excellent. Well, it's a very exciting time. Lithium prices are improving. We'll see if they continue to improve to the levels of higher levels required for incentive pricing. We think hopefully that happens next year, or into 2027. But as I mentioned, uniquely in the industry, you have a utility partner. There's big oil that have come into companies. There have been some big mining like Sibanye-Stillwater have come into, Caliber. You've had big auto in GM and Stellantis and a few others that have taken equity stakes in projects. But I think you're the only lithium project I've seen that has a utility who understands solar, wind, plus batteries, and the dynamic. You're seeing Google and Microsoft, trying to restart nuclear plants in the U.S. And I think this dynamic of the hyperscalers plus utilities thinking that they need lithium, like they might need uranium for a nuclear plant, is going to be something that unfolds. And you're a bit of a pioneer in this regard. Okay, Keith, this is a great update. I hope once the DFS is out, we'll have another conversation with you. And I expect there won't be another 8-month gap as there was from our last interview, given the expected news flow going into 2026. So unless there's anything, Rodney, you have any more questions, or Keith, anything I should have asked that you'd like to say before we sign off?
Look, the only thing I would add, Howard, I touched on it, but just to reiterate, I think that the grant that we've just received is significant enough that it will help change positively the perception that the global mining investment community has about investing into European, EU-based mining projects. It's that significant a development in my mind.
Okay, great. To use a Trump word, it is huge. 360 million euro is definitely huge. Okay, thanks a lot, Keith, and we'll speak to you soon.
Thanks, gentlemen. Always a pleasure.
I'd like to thank again our sponsor, USCF Investments, who have been making it easier to get exposure to commodities investments for almost 20 years. USCF's Sustainable Battery Metals Strategy Fund, ZSB, is designed to capture investment exposure to metals powering electrification such as lithium, cobalt, copper, nickel, aluminum, and silver. To learn more, watch our inaugural episode with CEO John Love and visit uscfinvestments.com. And thanks as well to Lithium Royalty Corp, which just published their Q3 results, which demonstrated 86% growth in revenue from last year's third quarter, which included first royalty payment from their 3Q project operated by Zijin Mining in Argentina. To read that press release, visit their website, lithiumroyaltycorp.com, and follow them on X @lithium_royalty.